Yeah, so today we are going to discuss about the business overview, like what's the background of the company and what's the currently business segment the company is. Some of the key important aspects that one should look at while identifying the company for future investment opportunities. And he will also be taking you through the investment thesis, some of the inherent modes of the company the business has, and some of the forward risk that we should keep in mind before. So just to give a brief background before Neogen. So Mr. Haridas Kanani completed his BTech from IIT Mumbai and chemical engineering, and then he did some consult, he started a chemical company, right? So he was the first man to develop the indigenous way of coming up with the bromine synthesis, right? And mainly just when he started the company, there was a flood in Gujarat in 1970s, which destroyed the plant, right? So basically, he has to do some consulting work for 10 to 15 years, raise some additional capital, and then he again started the Neogen company in 1989, right? So he is he is basically the person who has developed the indigenous way of manufacturing bromine in India. Otherwise, the major players, if you look at, so Jordan is one of the major players who is manufacturing bromine, mainly because its proximity to the Red Sea. So mainly the plants for in fact Neogen also, if you look at, so bromine is mainly processed from the sea water, right? So basically, because of the proximity to the run of Kutch, the plants are still located in a region where they can easily procure the seawater and then process it to manufacture bromine. Now talking specifically about the Neogen, how the company came into operations and all. So if you can just move to the next slide, please. Yeah, so it's the leading player in the organic and inorganic side. So mainly the organic side, company is mainly manufacturing into mainly into three segments. It's into APIs, or into intermediates. Then it's into custom synthesis of the molecules along with the bromine derivatives. On the inorganic side, basically it's manufacturing lithium-based derivatives. The company is manufacturing lithium-based derivatives. So roughly, if you look at the normal broad breakup, so 80% is into the organic side and 20% in the non-organic side, inorganic side. Also, the company has around 3 manufacturing facilities. The one is in located in Dahej, the other in Mahape and Vadodara. So out of these 3 manufacturing facilities, company is mainly producing the organic and inorganic chemicals. If you look at the products, the molecules that the company has developed over the years, so even the founders of the company are technocrats, right? So they have the technical, they are aware about the technicalities of manufacturing something complex like bromine derivatives and custom synthesis, right? And they take active part in developing the business in terms of more complexity associated with the product, right? So if you look at the number of molecules, so they have currently they started with a single molecule in 1989, and now they have around 226 molecules which they are currently manufacturing, right? And also they are increasingly going towards custom synthesis side, which is again a high margin business and requires a lot of details, and it's a lot of value out for the clients also, right? So basically the clients get into slightly longer term orientation for such kind of contracts. And if you look at the companies where it exports, so basically the Neogen company exports to around 28 countries, right? So mainly it is exporting to US, European Union, and then Japan, right? So these are the main export countries where the Neogen is supplying its material. Talking about the suppliers, so mainly Neogen has a lot of very wide supplier base. So as such, we have seen last year it was a pandemic, and a lot of chemical companies who are importing from China mainly got affected because of irregular supplies of raw material, right? So mainly if you talk about the raw materials here, right, for the company, so the raw materials are mainly the bromine and the lithium side. So bromine is easily procured from run of Kutch that I've discussed earlier, right? For lithium side, so mainly there are 2 major hubs where you can get lithium. So basically 40-45% of the lithium is produced in Chile and Argentina, and 40-45 again 40 odd % is produced in Australia. So our company mainly imports the raw material from Chile and Argentina, and it also has tied up with 4 or 5 big MNCs in case there will be some disruption or some sort of supply chain issue. So in terms of suppliers, it has a very long-standing contract with all the suppliers of raw materials, and they have been working with the company for close to 10 to 30 odd years, right? So in case of as such disruption that we have seen last year, so mainly our company did not feel any such sort of adversity in those times, mainly because the products which are produced by the company, these are essential commodities, right, that goes into the agrochem side and the pharmaceutical side. So even if you look at the production, which got just hampered for 40 odd days last year, right, and the company quickly started the production in the mid of April when the pandemic was when we're suffering from pandemic last year, right, and everything was under lockdown. So company started operations much earlier. And if you look at the growth in terms of the revenue and the profitability that the company has generated, so the promoters work with a vision of doubling the capacity every 3 to 4 years, so that also the top line grows. And if you look at the last 3 years revenue growth, so that has also been close to around the company has doubled its revenue, right, in 200% growth in revenue. And also, if you look at the profitability of the company, so that has grown by around 3.5x to 350 450 odd percent growth in profitability as well, right? So that's the brief overview of the company, how the company has been doing in terms of normal business and the financial side. So if you can just move to the next slide, please. Yeah. So just to quickly take you through the brief journey of the company. So the company started operations in 1989 when the company was privately incorporated, right? And then in 1990 to between 2000, right, the company got converted to public limited company. And then also because of the emphasis of promoters, Mr. Haridas Kanani, and so the company started its bond with the R&D and set up its first R&D facility in 1998 between 1998 to 2000. And then if you look at between 2001 to 2012, because of all the importance that has company put into the R&D side, so a lot of molecules have been developed by the company, formulated by the company. And if you look at the growth in those years, right, so between 10 to 12 odd years, the company has grown the capacity by the production by 7 to 8x, right? So if you look at the JLR capacity that was in 6,000, right, that has grown to 45,000 JLR, right? So JLR is basically a unit which is used for measuring the capacity in specialty chemical side. So basically these are glass line reactors liter. So that was the capacity enhanced by the company between 2001 and 2012. And now what happened that the company has utilized its existing capacity and that there was no land bank to expand further. So mainly in then year 2012 between 2015, the company acquired land at the Dahej SEG. Mainly company was also looking to improve the exports, and also it was sourcing raw materials. So mainly presence into SEG will provide a lot of flexibility to the business, right, and saves cost associated with it, right, both the import and export side. So company carefully chosen facility near the Dahej SEG, and then look to expand there. And between the year 2016 to 18, the company acquired manufacturing operations and land from a company called Solaris Chemtech. And basically the deal came with a lot of land back also, which also gave the company ample room to expand further, right? And then it acquired a 90% stake in a partnership firm called Dhara Fine Chemical Industries. And then it commenced operations at the Vadodara facility as well. And the year 2019 to 2020 was a big leap for the company. The company got incorporated on the stock exchange and raised 132 CR, right? It filed for its IPO and raised 132 CR in year 2019. And then it's also started a CSM vertical, which again, if you look at the 4-year performance, so it has grown. So it has grown considerably in last 4 years. And it also doubled its inorganic formulation capacity, or inorganic derivatives capacity, to meet and fulfill the demands, right? So that has been the brief journey so far. Let's talk about what the products the company is currently manufacturing into. So if you can just move to the next slide, please. Yeah. So if you look at the main products that the company is into, so the company is mainly in manufacturing organic and inorganic chemicals, right? So organic side, I have just have discussed earlier, it has mainly 3 verticals. The first is the bromine compounds, the second is the advanced intermediates, and the third is the custom synthesis and contract manufacturing, right? So these are all different kind of verticals, right? Like one being the mass commodity, the other being the highly specialized commodity, with a very few players with the know-how, right? Know-how of the for producing that specialized molecule. So talking about the bromine compound, so basically it contains the chlorine and fluorine and iodine based combination, right? And basically these are also company manufacturing Grignard reagents, right? So basically these are chemical agents which helps in the facilitations of reactions, right? So organic chemicals are something which has carbon attached to it, right? So that's a brief classification of organic and non-organic. So bromine compounds are mainly like chlorine, fluorine compounds that the company currently is manufacturing for its client. And then there comes the advanced intermediates, right? So those who don't have the background in the pharma or agrochem side. So basically the company have certain value chains associated with it, right? In pharma companies, right? So the sum is one of it is like key ingredients, then advanced intermediates and APIs, then formulations, right? So companies mainly into manufacturing of advanced intermediates, and they create forward integrated value-added products by combining bromination with other chemistries, right? So just to give you a quick difference, right? So if you look at the bromine compounds, so these are if the normal compounds sold for, let's say, $7 to $20 per molecule, right? So advanced intermediates and the something like CSM or custom synthesized molecules, they go much higher on the value chain, right? So they are sold for $200 to $300 per molecule, right? So you see there is a 10x jump in the realizations if you just going ahead slightly 2 or 3 step into the value chain, right? And then just to keep in keeping up with this thing, right? That company first started the bulk, then got into advanced intermediates. So now in the last 4 years, the company has put into a considerable effort to come up with the custom synthesis and contract manufacturing vertical, and then company is getting new orders for those sort of batches, right? For manufacturing for a lot of innovators, and mainly these are used in industries such as pharmaceuticals, then agrochem, also electronic chemicals, aroma chemicals, flavors, and all. So mainly organic chemicals have uses to these sectors. Now going ahead, if you can move to the next slide, we'll discuss about the inorganic side. Inorganic side. So lithium-based chemical products, the end user segments are mainly the eco-friendly VAM for cooling air water processes and are used. Then they are also into pharmaceutical specialty polymers and construction chemicals, right? So if you can look at some of the clients from the inorganic chemical side, so mainly like Thermax is there, which is a client for inorganic chemical. Then also if you look at the Voltas is another client. Also, if you look at some of the pharma names like Markio pharma names, so Piramal is there, Aurobindo is there, Heikel is there, and Davis Laboratories is there, who are some of the buyers of organic chemicals for the company. So this has been a very broad clientele for the company, whom the company is servicing for close to 10 to 15 years now, right? And they have been doing the business for the company, and now they have started to give more contracts because of their expertise in the custom synthesis side. So if you can just move to the next. Yeah, so that's a brief breakup of the business, right? So the inorganic is 90% and organic is 80%, 81%. Export is 36% and domestic is 64%. And if you look at the last 4 years revenue CAGR, so that's roughly stand for 27. So the revenue has improved from 27%, at a CAGR of 27% from 163 CR to 336 CR, right? So what the company has guided that going ahead, the company will be doing a revenue of 450 CR in this financial year, and by 2024, the company will be doing a revenue of 650 CR. That's mainly because company has acquired a new facility at Dahej, which can improve the capacity by 150% existing capacity. So that's a near-term trigger, which is very important one for the company, because the entire year the company has orders, but company couldn't manufacture beyond a point, right? Mainly because the company was running at 70-75 CR. And if you look at the CSM vertical also, which the company is claiming to take it up 20% from the 10% currently, right? So if you can look at the pace at which the business has grown, it used to be just a 4 CR business in FY18, and that has gone up to 30 CR now. So that's a great leap that the company has taken in the CSM side. And if it all goes by what the company is commenting, and based on our interaction with the company that we have found out, so it will the margins of the company will surely improve, which is already improved last year because of all the capital efficiency initiatives that the company has taken, right? So we can see some further improvements going forward. Prabhu, if you can just move to the next slide, please. Yeah. So this is what this is a brief of the manufacturing facility of the company. So the company was mainly manufacturing its product at Mahap, where it has 45,000 GLR capacity, which was fully occupied. Then the company also started manufacturing at Raudura, where it has a capacity of 85,000 GLR liters, right? So if you look at the company, current capacity was 130 GLR liters, and then a new capacity at the Dahej is coming, right, which has a capacity of 126,000 GLR liters, right, or 1.26 lakhs GLR liters, right. So that's again close to double the existing capacity, right. So this capacity is already come online. The work got delayed because of the COVID, but the capacity has come online now, and we can see that the trial which has already been passed for the clients. So we can see some meaningful production start happening from the Q2, right. And then also then what they have done, that on the inorganic side they have improved the capacity to 2x, like they have double the existing capacity to 2400 mtpa. So that's a good the growth that the company is doing on the production side. And if you look at the R&D facility and the product development, so currently the company has 15% of the workforce is devoted to the R&D side. So it shows the seriousness of the company to develop new molecules and bring some motor on the business. But that I leave to my colleague Vijay to discuss further. So Vijay, over to you now.
Yeah, thank you, Prabhat. Now we will be coming and looking at some of the key metrics of the business. Also, we will be talking about why should we look at the Neogen Chemical and all. So coming to the metric side, so basically Warren Buffett famously quoted that if the story that you are telling me is not getting reflected on the numbers, so that story will just remain a story. It will never become part of my portfolio. So it's very important to look at the business story and then try to correlate it with the financial numbers it is trying to produce on the balance sheet side or the income statement side. So moving quickly on the first couple of ratios which are very important, basically which are the investment ratios in terms of capital efficiency on the equity return on equity side. So if we look at the FY19, FY20 and FY21 3 years basis, the return on capital employed has been consistently about 15%. The drop in the capital efficiency and ROE is just because they have raised the capital in 2019. So 2019 they did the IPO and they raised 132 crore. So what has happened that 132 crore has gone into the the commercialization and building of the plant at the Dahej side. That company has been trying to commercialize in last 1.5 years. So because of that, capital has gone up, but the sales has not started, right? So because of that, efficiency has got little bit on the downside. But if we look at, because whenever if we exclude the cash, the return on capital employed will be more than 20%. So for us, this can remain an inflection point because company has already started doing the initial batches for the new plant, and once the plant pickups from the Q2, we can see the decent jump in terms of the EBIT margin as well as on the PAT margin side. So that will also improve the return on capital employed going forward. So what we expect these ratios to move forward. So by FY24 we are expecting around 25% of return on capital employed as well as the return on equity. So once we have to whenever we are looking at the story, so we should also look at the complete picture, that what is happening with the business, or let's say were they facing any issue, or the drop in the return ratios are just only because of the financial nature, because they raise the capital. So there is always a one level deeper when we look at the balance sheet and the ratios. So that gives us the whole picture that what is happening with the business. Now moving on to the next slide. Yeah. So if we look at the profit growth and the couple of the leverage ratio, So if you look at the profit on the left side, so the company has been steadily increasing their profit from 21 odd crore to 29 and 31 odd crore in FY21. And if you look at the debt to equity, so company has successfully deleveraged its balance sheet from 1.65. So whatever the money that IPO money has gone into the prepaying of debt, and which has like increased the stability of the balance sheet, coming down from 1.65x to 0.85 and currently stabilizing at around 1.1x on the leverage side. So when we are picking any business in our portfolio, so we have like certain very hard bound characteristics that we want in our kind of the portfolio business. So for us, like sales growth and return on capital employed and debt to equity remains a key parameter that we should look at when we are picking any business. So if we look at the last 3 years period, net sales growth is around 27% CAGR, return on capital employed is 25% on average side. So the idea that what we are trying to capture by return on capital employed is basically if company is making ROI of more than 12%, so we can easily get the same stock price CAGR. Let's say if company is making 20-25% kind of return on capital employed, so we can also expect same level of performance in the stock price as well, right? And if we look at the debt to equity ratio, which is a leverage ratio, so we have put a hard stop at 1.5x. So basically the non-banking and non-financial companies, ideally the debt to equity ratio should be less than 1.5x. Of course, there can be some exception depending on the business model, but the kind of business model that Neogen operates in, so we have put a hard stop around 1.5x, and companies stabilizing around 1.1x. So that is a very good indicator. Now we will quickly move on to the part like why should we now we have idea about like how the balance sheet and income statement parameters are. Now we will look at some of the ground stories or ground stuff that company is happening, and one should be excited about it, like why should we go and let's say invest in particular business. So Prabhu, please move on to the next slide, please. Yeah. So for that purpose, we will talk about the moats. So just basically to give a little bit idea on the moat side. So basically moats are nothing but the competitive advantages. Okay. So what is a competitive advantage? So basically, let's say in one industry, let's say 5 different players are operating. So out of those 5 players, like each one should have some differentiating factor compared to other. And the player, or let's say the company who has like better advantages or the better edges over the other player, they will eventually, let's say, maximize their profit margin, they will maximize their revenue share, they will also maximize their balance sheet stability. So it's very important whenever we are picking in any business, we should also look at the industry as a whole, and we should try to understand like the how the other player is different, or let's say how other player has some edges over other over second, third, or fourth player. So there are like 6 key advantages that we have outlined. So first is the specialized business with a high entry barrier. Second is the diversified client base. Third is the R&D investment. Fourth is the large set of products. Fifth is one is the strong manufacturing capacities. And the last one is the strong relationship with the suppliers. Okay. So if we talk about the first point, which is a specialized business model and the high entry barriers. So basically, as Prabhat pointed out, like bromine and lithium are like a very hard chemistry to deal with. Okay. So by nature, bromine is quite corrosive. So you need to have like develop certain level of expertise. So when this is the same vision that Harin, the Mr. Promoter has set for the Neogen Chemical, that Mr. Kanani always believed that if we do one thing which is complex, but we keep on doing it, so we'll become master at one thing. Okay. So we will be like, if we are master at one thing, so we will charge more, we will be able to like give our clients better services. So that thing has generated stable moat around the business model side. And let's say tomorrow if a couple of players come in the industry and start manufacturing bromine and lithium, so though we'll have to pass through the experience of let's say 5 or 10 odd years to develop that kind of expertise and the quality of the chemicals that they are manufacturing. So that is a very solid moat that business has built up in last let's say last 2 decades. Now moving on to the next slide, please Prabhu, move to the next slide. Yeah. So now we will talk about the modes that we have discussed in the earlier slide. So like if you look at the manufacturing capacities, like there are three manufacturing capacity. One is the Mahape, second is the Vadodara, and third one is the Dahej. Okay, so the first two are completely operational. Third facility is going to come online in the quarter 1 in the past Q1, and for the trial batch production has successfully happened, and also the clients that were going to get production from this plant has accepted the quality of the product that they have Neogen has supplied to them. So the order has been approved, and we can expect the commercial production starting from the quarter 2, which is basically the starting of the July 2021, which is a new capacity of 1.26 lakh glass line reactor liter. So now moving on to, let's say, the R&D side. So like to move on the R&D slide. So basically what when we were like looking for the chemical industry, so I still remember that we had like lots of when we started looking the chemical industry. So by nature, specialty chemical is a quite complex business, and we thought that it's better to get some guidance, or let's say get some knowledge from the industry experts. So we tried to connect with the IIT professor from the IIT BHU, and we learned that some of the chemistry are very complex to learn, but some of the chemistry are very easy to replicate, right? And we came to know that the bromine and lithium are the particular chemistry that is very hard to replicate. Also the fluorine chemistry is very hard to replicate. So if some business is operating in this kind of chemistry, they can become like a strong player, and they can charge heavily to their clients, and they can build a stable business. So that's why we started looking at the Neogen Chemical, because we got the insight from IITs and also the other investment professionals, industry professionals. And then we started looking at Neogen Chemicals. We started interacting with the promoter, also the business management team that was handling the company's investment relationship department. And we understood that the company has been for the company, it has been the major focus on the R&D side. If we look at the company's employment force, so around 12% of the employment for employees are in the R&D vertical, which is a quite high number if we compared with the industry, which is just around 6 to 8% for any other company. So we understood that they are basically trying to build a moat in terms of R&D, because that's how they want to grow their business. So for this purpose, what Mr. Kanani has done, so he tried to innovate his business, that he wanted to go into CSM business going forward. He brought in the best industry person from the industry, Mr. Surana. He has been with the PI industry for 14 years. He built the PI industry's whole CSM business in the last 14 years. Then he joined Neogen Chemical. Basically, under his expertise, like Neogen is trying to build up the CSM business, and coupled with the R&D, so they are expecting, let's say, if we look at the last product portfolio expansion last 3-4 years, so company's product portfolio has expanded from 189 to 226. So these are all high quality molecules, and whatever the incremental allocations on the molecule side in next 3 years, they will be on the CSM side mainly, right? So if we look at the R&D spend, so 90% of the R&D spend is going towards the advanced intermediate and CSM side. So they are building complex molecules. So from that, we can deduce that they are going to make higher margins. What margins they are currently making is just the, let's say, the lower pitch for them. In upcoming years, we will see the significant margin expansion, because company is already moving in that direction. And if we look at some of the end industries, so company has very well diversified base of different industry, like pharma contributing to 55%, agro is around 15%, and others around 10%. So what we understand that Neogen has tried to do justice with all the aspects of the business, like say clients on the R&D side and product portfolio side, also bringing in the key capital like Mr. Surana from the PI industry. So these things makes us, or let's say gives us the evidence that they are progressing in certain direction, and increases our let's say the conviction on the company. Yes, they have right set of employee, they have right set of capital with them, so they can grow, and they are already moving into the direction. So when we have such kind of conviction on the business, then only we will go and put heavy capital in our portfolio in such companies. So quickly moving on to the next slide, please. Yeah. So the efforts that they have started putting in at Neogen. So what we are expecting, also the last time in July when we interacted with the management, or in the last week of the July. So what we understood that the company is on track from days increasing its revenue from 336 odd crore to 650 crore. So if we look at the CAGR basis, the 24% kind of CAGR will be generated in next 3 years. And this can happen through the new capacity that is coming online, which is the doubling of the original capacity. Second is the margin expansion, which is coming from the CSM side, which is the complex molecule. So what we have what we can infer from this, they have already handed out that trial batch production to their clients, and they have approved the production. So we think that FY22 can be the inflection year for the earnings breakout. And for us as a long-term investor, it's a very strong point to stay invested in the business, because whenever business is doing something repeatedly, they master it. They become master in one chemistry, and that's what we are looking for. So we don't want the player who is doing everything in their own basket, because if you are doing something, you are not giving the more attention to the your high-end chemistry. So in this case, Neogen has been constantly saying that we won't dilute our focus in terms of our chemistry. So in long run also, they are planning to stick with the bromine and the lithium chemistry that they have mastered in last 3 decades. So we become very sure that these guys are going to become specialists, or they are going to master this chemistry more by sticking to the portfolio that they are good at. Now we will look at some of the negative points of the antithesis points, because it's very important. When we are talking about the story, we should also talk about the risk that business involves, right? So move to the next slide, please. Yeah. So Neogen is basically a specialty chemical companies, and also the industry that it which operates in. So there are some key risks, or let's say some antithesis points that we always should look at, because when something goes wrong in the company, we should always be in position to assess the risk that company has possessed from the beginning, right? And in our portfolio as well, like in Right Horizon, we always believe that one should always put more focus on the risk side, because whenever the uncertain thing happens in the market, so market crash, or let's say the story crash happens in very sudden time. So we should be equally focused on the risk side when we are talking on the return side as well. So if we look at some of the key risks that Neogen is exposed to, so one of the key process is the R&D process, or let's say the R&D impact. There is some slowdown in the research and development activity, or there is some, let's say, regulation issue that comes around the R&D plan, so that can adversely impact the business. Also, some of the as Neogen has started exporting to the more foreign markets, 36% of the export share is going to increase to 50 odd percent in couple of years. So each foreign jurisdiction has different kind of regulations. So Neogen has to be very careful while dealing with such kind of regulation. Also, the when we are doing the trial production, let's say as we discussed for the last quarter, so they were successfully get the clearance from the clients on the quality side. But sometimes it may happen that client may not like the quality of the batch that you have produced for them. So there can be some delay. So the number of roles can remain pending because the quality is not up to the mark. So that is also a key point that Neogen should look at. Lastly, on the customer contribution side, so top 10 customers contribute on 40 to 50 odd percent of revenue. So that is a client concentration. But if we compare it with industry, so industry concentration is a little bit higher in the range of 55 to 60%. So we think that Neogen is a fairly comfortable. And also going forward, the two new players which are going to join the journey of Neogen, so they are also going to diversify on the CSM side. So we hope that this revenue contribution will also come down to 40 to 50 odd percent range to 35 to 40%. And also companies exporting to the foreign market, so there is little bit of foreign exchange risk, although they are hedging the whatever the supplies they are doing to the foreign markets to currency derivatives, or the dollar put spread, or let's say the different kind of currency spread that they are actively exporting to. Also raw material disruption is one more thing. Last year we experience. So Neogen has successfully tackled it by like diversifying their supply chain production, where they are going to get from, like, they are getting the materials from Italy, Jordan. They are also getting material from the indigenous manufacturers of India. So we think that Neogen has done fantastically well on covering their raw material supply chain. And lastly, on the intellectual property side, because as we have pointed out that Neogen is trying to build the R&D based business model, and they are constantly innovating the products, and that's why they have been able to launch successfully in the CSM side as well, and the revenue has increased for CSM to 7x in last 4 years. So we think that sometimes what happens, like in the business, they are making some particular chemistry, and there can be some intellectual property fight with the other player. So that Neogen should be key focus. And also, like, from our as a investor in this company from long term, we always think that the business whichever is working in any way, so they should be like talking openly with the shareholders. That we have found with the Neogen, that it has been open with shareholders, it has been open with us, and constantly giving the clear guidance to the investors or the market as a whole, that how the business is like, let's say, correcting their old mistakes, or how they are, let's say, becoming more perfect, because perfection is a never ending process. And that's what we liked about Neogen, because they are constantly doing some innovation. They are making themselves more perfect, and they are going to hit more perfection going forward. So we think that Neogen as a business is a great business to look at. Also on the like the stability side, the company has a very solid business model protected by the moats that we have talked about. So we think that Neogen story can remain good accretive for the shareholders that we are going to invest in the Neogen Chemical. So I think that's it from our side on the Neogen Chemicals. And
1 second, sir. Sir, thank you very much. We will now begin the question and answer session. The first question is from Mr. Amarnath. So, what's Neogen manufacturing facility utilization history, sir?
Yeah, so if you look at the last 4 years horizon, starting from 2016, so the Mahape facility was around 90 odd percent, 90 to 95% organic side. And in 2017, the Vadodara facility started coming online. Okay, so the capacity utilization for Vadodara started increase somewhere from 20%. They started in Q1 FY17, and in 2018 they stick it around 50% for the Vadodara. And if you look at the FY21 ratio, so now the Vadodara and Mahape both facilities are around 80-85% in the zone of. So Mahape is around 85% and the Vadodara one is around 80%. And the next capacity that is going to come online at Dahej SEZ, Dahej SACE area. So that will take the next level of growth. That is been the history around the business. And like Mr. Promoter has pointed out, that Mr. Kanani, that whenever some capacity is hitting 90% capacity utilization, so they know that now they have to go and build a new manufacturing capacity. So that's what they did with Vadodara facility in 2017 when Mahape started hitting 90%. And in 2020, when both facilities are doing 85-80 odd percent, so they started going with the Dahej facility. So even like 2024 or 25, we are talking about 650 odd crore of revenue. So the same kind of stance will be taken again by the management, because they have around additional land parcel of 35 acre on the Dahej side. So that land can support around 8x capacity of the current manufacturing capacity that Neogen is operating at. So they have a good chunk of land parcel with them. So we think that going forward as well, like as promoter has pointed out, that by FY24, the Dahej capacity, the initial capacity should also hit the 80% mark, hopefully. And then like they will go for again one more brownfield expansion in the same site. Yeah, I hope that answers your question, Mr. Amana. Yeah, thank you.
Thank you, sir. The next question is from Mr. Ravi. So his question is, what is the CSM business?
Yeah, Prabhat, would you like to take the question?
Yes, so mainly like in CSM side, so there are innovators who have like developed the patent around a company, right? But they don't manufacture the molecules. So what they do, they outsource the manufacturing production, right? The trial batches and all to some other company, right? So companies like Neogen and in fact like one of the pioneers in CSM business, PI industry. So what they do, like they take the contract, they take the patent from them, right? So there is a confidentiality agreement that the company who is doing like producing the trial batch and all, he will be not be like replicating the product again, right? So mainly they take the orders and like manufacture some trial batches, and then like if the trial batches comes fine, so then they manufacture the entire product for the company, right? Molecule for the company. So this is what a CSM is. Basically you are doing a contract manufacturing, so you are outsourcing your in-house manufacturing to some other party, right? But the patent lies with you. Right. And in case of this company, Neogen, so basically they recently started the CSM business in 2019, and they have expanded the business from 4 CR to 30 CR now. And what they are saying that like, going forward, maybe in like, next 3 to 4 years, so that would be like, close to 100%, right? So that will be 100 CR. So basically they will be increasing the revenue or the share of this CSM business from 10 CR currently to 20, sorry, 10% currently to 20%, maybe in 2, 3, 4 years down the line. And this is a high margin business, right? So basically like it's not that you are developing a product in house and like as per your comfort, and then you are taking it to the market. It's basically like taking the material from a third party, and then you have to adhere to his guidance and his like specifications, right? So not every player in the industry can do it. It requires a high degree of specialization, and that's like why it's a high margin business also. Vijay, if you would like to add something here.
Yeah, so like on the CSM side, as this is a very complex molecule that companies try to manufacture. So whenever like even there are lots of industry participants who are trying to do the CSM business in Indian domestic scenario as well. So if anyone is looking at some particular CSM business, they should also look at the kind of person that is running the business. Okay, so there are let's say some type of people in the industry who have the expert, who have the capital to start a CSM business, but they don't have the intelligence or let's say the experience to run the CSM business, because CSM vertical is very complex. Lots of regulation is surrounded by that. So like in Neogen, like they got the Anurag Surana from the PI industry who had 14 years of work in the CSM exclusively. So even like if we want to, let's say, look some other different story who is doing CSM story in India. So one should always look at the kind of person that they are running the business, right? Because it's not like that every person can go and do the business, because it also requires some kind of knowledge in terms of academics degree and also the regulations, also the capital part. So one should be cautious while picking up such business. Also the attitude of the person also matters, because you have to constantly take feedback from your clients, right? So some of the people who are not very, let's say, the mistake friendly, let's say whenever they are committing some mistake, they can, let's say, they can't control their anger and all. So there had been lots of issue with the basically the Vadodara based unlisted companies. But so one should always look at that, how the company is dealing with their clients, okay? Because it's a lots of to and fro when the trial batch is going around. So one should always look at the whole CSM vertical in terms of capital as well, and so the persons who are going to run the business. Yeah, I think that answers your query, Mr. Ravi.
Yeah.
Prabhu, we can move to the next question.
Yeah, thank you, sir. So the next question is from Mr. Kunal. So could you please share some highlights on the size of opportunity of CSM business, and what is the market share in commanding by Neogen in the same?
Right. So for industry size on the, let's say the currently Neogen is operating and they are planning the CSM side. So industry is basically defined in two parts. So one is the volume and another is the value part. So if we look at the volume part, so on the global level, the whole industry is around 5 lakh MTPA, right? On the total opportunity side. Out of that, the specialty business for that particular chemistry like bromine and lithium that Neogen operates it is around 50,000 MTPA, right? And out of that, currently, if we look at the basis that they are running run rate, so it's around 3000 MTPA, so which is around 6% of the specialty chemical share that they are talking about, right? And if we are talking in terms of the value, so value, the CSM business that on the bromine chemistry side particularly, because that's a lots of chemistry like fluorine chemistry that Naveen Fluorine is doing, or let's say Aarti Industry is doing benzene chemistry. So for the Neogen, the bromine remains a key chemistry, which is around 4,000 odd crore, and Neogen is doing revenue of around 250 crore in the bromine side. Remaining is coming from the lithium chemistry. So if we look at even the value side, so Neogen has huge opportunity. It's around again 6 to 7% in the value share as well. So we can expect the decent upside. And in the long term guidance, like when we attended the last AGM, so the long term guidance for the Mr. Kanani remains that they want to capture the whole industry of the specialty chemical, in particular the bromine chemistry, around 15% in next 10 years. So that's the journey that they are planning in next 10 years, that the company should at least come on 15% industry share on the CSM side in the particular bromine chemistry. Yeah, I hope that answers your query on the CSM side. Yeah.
Okay. Thank you, sir. The next question is from Mr. Amarnath. Is lithium supply source is in Afghanistan by any chance?
Yeah. So Prabhat, would you like to take this question? I think
So you are on mute, sir.
Yeah.
Yeah, so basically lithium is mainly produced by two other countries, right? So lithium is mostly produced in like Argentina and Chile, 40-45%, and then Australia accounts for 40% of the production. So from where like our company Neogen imports the material, so it's mainly from Argentina.
Okay. Thank you, sir. So due to time constraints, we would like to conclude the webinar. However, if you have any further questions, you may reach out to us through phone or email, and we'll be glad to answer. So thank you on behalf of Right Horizons. Thank you for joining us, and you may now disconnect.
Thank you all.
Thank you, everyone.